Well, we're just watching this roller coaster, and it's just an example of a market trying to find a new support level. We see that the VIX is up yesterday to a one-year high of 38, and that typically indicates washed out conditions. So we're looking for that to probably hover around that area, just as we are waiting for the Fed to come back out and speak. Now, the dollar's been strengthening as the market sold off the last few days, so that's indicating there's additional fuel for U.S. bonds since they have to buy in U.S. dollars, so they have to do that transaction first before buying the bonds. And the concern is those rising rates from the Federal Reserve, but overseas demand, we think, will keep a lid on Treasury rates near term.
So let me ask you just right off the bat about NVIDIA. You know, this is one of the names that's had a pretty steep correction from the highs. It's interesting to see the semiconductor, the SMH ETF, down 4% again today, although we're not at the lows from yesterday at all yet. Why do you think semis continue to trade so heavy, and what makes you confident to pick up NVIDIA now versus waiting it out for a while?
Yeah, we just think it's oversold, and, you know, we're never going to be able to pick the perfect bottom on these things, but we think the outlook for semis is very positive, and we're looking for other semi-type of names. We're just trying to find high quality at very good pricing, and that's where NVIDIA stands right now.
Is NVIDIA a name you would have held in the past, or do you see this as an opportunity to get exposure to one that you haven't previously been invested with?
Yeah, we've traded in and out of it in the past, but we're always looking to buy at an opportune time. And we know the demand is there for semis. We know that the applications are everywhere. It's not just the auto market, it's everywhere. And so this is an opportune time, in our opinion.
What about big tech more broadly, the NASDAQ? I know you guys are more single stock investors, but are there other names? We'll talk later about Microsoft, but it reports after the bell, and it's 18% off the highs. Does that become attractive to you?
Yeah, definitely. We have some Microsoft, and we're looking to add more, you know, as the earnings reports come in. And that's probably true across the board. You know, we've seen a lot of, I'll call it robo-selling in the last few days. So that steamroller just gets going downhill, and you need fundamentals to stop and for people to come in and take a hard look at valuations and growth prospects. But when you have growth rates in the 20s and PE ratios in the mid-teens, like we see also with DocuSign, you know, that's an opportunity in our opinion, and we've been adding to that one as well.
DocuSign, very interesting. Again, one that's corrected big time off the highs. Any others in that kind of high-flying group? You know, I don't want to call them the Art K stocks, but any others that are really down quite sharply, but you think could have a second wind?
You know, we just look across small, medium, and large cap tech, and we're looking more toward the small and mids at this point in time. But we're definitely taking a hard look to add.
And finally, Mariann, there's some who say that if Microsoft disappoints tonight, it's going to unleash a fresh wave of selling because the earnings are the only thing people have to hang on to at this point. And it's been a season of disappointment so far with the financials and some of the other names reporting. What would your instinct be if you see Microsoft down another 5 or 6%? You know, I assume if you see it moving higher, it might tell you that, you know, the bottoming process is definitely playing out. But what if you see red later on?
If they were to disappoint, I think that would drag the tech side, the QQQ and the ARC-type names down further. Again, this is a bottoming process. There's not a single point in time or a single stock that's going to determine everything, but we have to go through the process. And we just point our clients to that chart that shows pullbacks, you know, occur all the time. Not uncommon to see the 10% pullback. And the markets still finish up, you know, 75% of the time since 1926. So pullbacks are normal. You look at the laundry list of concerns, and it's huge, but we've been climbing a wall of worry since 2008 with an average gain of 11%. And our initial outlook for the year is that we'll have about that kind of an increase in the S&P this year. So this is just on the path to growth.
All right. Mariann, great to have you today. Thank you so much for your time. Mariann Montagne.